launch of the Financial Accelerator online learning program that we spent the last 6 months developing to help our clients and our students develop a plan that'll help them increase their lifetime income by $1 million or more if they just follow the 8 simple steps that we've laid out through the Financial Accelerator program. So let's dive into the 8 steps. And step 1 is about setting goals. And we know that based on research studies that those people who actually take the time to set goals are 10 times more likely to achieve them.
Well, yeah, Robert, what you mentioned was that we broke it down into 8 simple steps. And I don't want anyone to think that there isn't going to be any effort involved here because there will be, but you're exactly right. Those who set goals are 10 times more likely to achieve them. Now, what we have to do when we set our goals is, first off, you have to be realistic, right? They need to be real and achievable. You need to create some long-term goals, and then what you do is you work backwards from those long-term goals to create short-term goals to help you achieve that ultimate long-term goal. So I don't think it's really rocket science to know that when we set a goal, we're going to be more likely to achieve that goal than if we're, say, shooting arrows, right? If we're practicing archery and all of a sudden we don't have a target to hit. But when we do our goals, when we set our goals, now all of a sudden we have that target that we know we eventually want to hit.
So, Ed, give us some examples of some of the long term goals, and then what are some of the short term goals that we would set to achieve those long term goals that you suggested?
Sure. So let's just take retirement planning or retirement saving as an example. If we want to have, save up $500,000 in 10 years, all of a sudden that can be a very daunting task to try to save up that amount of money. So if we do like annual goals for here's how much I want to save, and we're going to get into investment advice later, but what type of returns do we need on investments? And now all of a sudden we have a short-term year-to-year goal that we can measure and that we can ensure will allow us to achieve that long-term 5 to 10 year goal.
And of course, there are short term interim goals like saving for a home, saving for a car, emergency plan, other sorts of kind of subsets to that long term financial independence goal.
Yeah, no, definitely. Yeah. I mean, what I gave was just an example of saving for retirement, but there are a lot of things that people want to save for. I mean, it could be early retirement. You gave a great example of saving for a home, right? And that really leads us into having these goals of wanting to invest and wanting to save, but really what we need to do is step number 2, which is create a budget.
Which helps us track those goals. Well, track the progress that we're making, of course, with those goals that we've set. So, on a monthly basis, track how we're doing and are we on the right path. And we know that 52% of people don't have a budget, so they're not tracking their journey towards achieving that essential goal.
Yeah, it is. I mean, that's more than half of the people out there. And again, I said it with the goals. I'm going to say it with a budget as well. We need to be realistic. If we're not realistic with our budget, what's going to happen is a month, 2 months, 3 months into it, we're not going to stick to it. We're going to say, you know what, I can't do this. So we need to be able to balance work, life, spending. We want to ensure that when we create a budget, that we are able to stick to it, because that's the important part of when we create that budget, of setting those goals as well. Now, what we also know is for those people who do create a budget, most of those people have developed a certain level of peace of mind, and then has also given them confidence that they are going to be able to achieve their short and long-term goals as well. I mean, what we're going to find is all of these are totally correlated, all of these steps, and they all fit together as part of a broader financial plan. And that's obviously why we called it the Financial Accelerator.
Yeah, and I think you made a great point. You were talking about confidence, and there's the intangible benefits as well. Uh, when you track a budget, it also gives you a sense of financial peace of mind. And I think that above and beyond the financial benefits of setting a budget and following it, I think it also gives people a significant amount of peace of mind. And when you look at like the divorce rates and the reasons for divorce, what's the number one cause of divorce?
Money.
That's right. So there are some intangibles that come along with this course, and I think peace of mind in regards to budgeting is one of those. And hopefully that helps people motivate them to which most of us procrastinate on following a budget because of the fear of whether we're on track or not. But peace of mind, of course, is something that is significantly important to the process.
Right, right. And when you talk about the number one cause for divorce and how it's money, a lot of that revolves around not necessarily the budget, not the goals, but I mean, a lot of people feel underwater because of the debt that they have. And we need to be able to manage that debt. And what does that mean? You have revolving credit, you have those credit cards, those have got to get paid off. So those have to be a priority because essentially that interest that you're paying along the way, that will eat away at a savings plan that you may have. And it just wears on you and it can weigh on you. So that has to be a priority. There's a number of different ways. And obviously in the program, we get into ways of being able to pay off that credit card debt. And then once you're out of that, now all of a sudden you can utilize credit cards for specific rewards, cash back. Now all of a sudden, instead of it being a weight on your shoulders, it's actually a benefit that offers you some substantial additional savings, potentially travel. And I mean, there are a lot of different great rewards cards that are out there. Now, one aspect for those who have a home that a lot of people don't even think about is evaluating whether or not you can afford to go from, say, like a 30-year fixed to a 15-year fixed interest loan, because that will save potentially, depending on the cost of the home, hundreds of thousands of dollars in interest payments. So that, I mean, that can be a huge impact. And I don't think we really mentioned it, but on those credit cards, minimum payments are not an option. And they've started, I mean, there was laws passed that basically showed, the credit card companies have to show, hey, what happens if you pay the minimum payment? What happens if you just add a little bit extra? And the difference is usually decades and tens of thousands of dollars in additional interest, because those minimum payments are the minimum that you're required to pay legally. And the vast majority of what you're paying, if you do the minimum payment, is only interest. So, I mean, we've got to manage that debt.
Yeah, and it's so important. We know that you just described chapter 3, which is really managing revolving debt, obviously 15-year versus 30-year home mortgage and the difference it can make. And if you really combine the two, you're really talking about anywhere from tens of thousands to hundreds of thousands in financial savings just in managing debt properly. And it's so important to understand the banking system and how it was developed to the advantage of the banking system. And so if you understand that and you can work it in your favor, there are some people out there, some famous YouTubers that are making upwards of 10,000 a month just working the banking system to their own advantage using rewards points and learning how to pay off balances, increase your credit score. And it does, it makes a significant difference. But the number one reason that people get into revolving debt is because they don't have an emergency savings plan in place, and that's chapter 4. So share with us a little bit about the benefits of putting together a proper emergency savings plan.
I think most people who are watching this understand the principle of what an emergency savings plan is. And it's been ingrained, even though it's not taught in high school. And that's one of the reasons that we started this entire project, is to help develop that literacy financially. And we've all heard the whole 6 months. And I would say, yeah, we could go anywhere from about 4 to 8 months of living expenses that you should have for emergency resources. Now, that for me would be the number one goal that I would set if I don't have that. That, in addition to paying down that revolving credit debt. Now, what that does is when we have that emergency fund established, we're managing our debt, we have our budget, we're headed directly toward the goals that we're setting. Now, when we have that emergency that comes up, we're not plunging ourselves directly back in to debt. Because when that happens, we feel helpless. We feel like we're not getting ahead, like we don't have, we're not headed towards our goals anymore. But when we have those extra funds that we've saved specifically for that rainy day, specifically for that emergency that comes up, it doesn't impact our overall goals and where we're heading.
Yeah, and I think once we get to that point, now we're really into that kind of dream casting because if you've taken care of emergencies and you're managing debt effectively, now that's when the real opportunity comes in. Not only have you saved tens to hundreds of thousands of dollars, but now we're looking at the availability of investing those savings into those long-term saving options or investment options. So, chapter 5 is about understanding your investment options rather than relying on the opinion of someone else or your employer or even a financial advisor. Understanding your own investment options allows you to dictate your own financial future.
Yeah, for sure. And let me tell you, Robert, kudos for bringing us and rolling us right into number 5. I could totally tell you were headed there as you started talking about the investment options. Now, you mentioned people understanding those options, and one of the best ways to understand those options and get help is by utilizing a trusted financial advisor. But what we want to help teach people is to understand the risks versus the rewards, depending on various investment options. I mean, we have investments in capital markets, which are what people traditionally know as stocks and bonds. And if you see the S&P 500, which is an index that helps track those markets, but there are also a lot of insurance investments as well, investments that can help offer like some guaranteed income, which we'll talk about a little bit later as well. But also, what a lot of people don't realize, and when I do evaluations for our clients of investment portfolios, and then also for our clients, I'll also take a look at their 401k plans. But what we want to see are what are the fees that are being charged as well. Like one of my biggest pet peeves are these target date funds. And the reason being is you have a management team that generally manages the target date fund. So there's a fee that erodes any gains that you can get there. Each of those funds generally is comprised of additional mutual funds. Each of those mutual funds has a team of people that are managing that mutual fund. So now all of a sudden, there's additional erosion of fees, right? So you have multiple layers of some of these fees. So understanding those investment options, and we'll get into some of the insurance investments as well, because those can offer lower but guaranteed returns. But it's understanding the risks, knowing what's out there. A lot of people don't know what they don't know. And what we want to do is we want to educate them and show them all the different options that are available to them.
And now that we're getting into investment options and figuring out how to set up those investments in a way that helps us achieve our long term goals, one of the biggest obstacles that most people do not take into consideration is the tax environment. So, for instance, in tax deferred accounts like 401ks and IRAs, we get the benefit of deferring the tax till later down the road. But help us better understand where our current tax environment is and where is it going, and how will that affect our tax deferred assets like 401ks and IRAs.
Okay. Well, Robert, it sounds to me like you're talking about step number 6. The risks of rising tax rate environment. Now, every year we pay taxes. And for a lot of us, it kind of hurts. We take a look at our paychecks and X goes to the feds, X amount goes to state. We've got stuff taken out for Social Security. Like, who knows how much of our paycheck is going toward taxes. And you know what? It does hurt every time we have to pay those taxes. What most of us don't realize is that we are actually in a position right now where tax rates are some of the lowest they've been in the history of our country. So for our parents who had highest tax rates of 50, 60, in some cases 70, the highest in the 40s was 94%. So it made sense back then to try to defer the taxes because now we're in an environment where taxes are lower. I think we know, given the fact that we have $28 trillion in debt, about 8 trillion of that was added over the last year and a half. I think we realize, and I mean, we hear it in the news every day, tax rates are going to have to go up. And in fact, we know that they're going to have to go up for everyone. And if we defer the taxes now, what's likely to happen is we're going to pay more in the future by way of taxation. And every 1% that tax rates go up is 1% less of income that we will have available to us in retirement. So if we can afford to pay, I like to call it invest in a little tax today in order to never have to pay tax again. So those tax deferred vehicles, if we don't know what the tax rates are, we have no idea how much we're going to be able to draw for income. We have no idea how much we're going to have to pay in taxes in the future. However, if we control what we pay now, then we can potentially, realistically, and in some cases we do it for our clients, not have to pay taxes again when we're in retirement. And that is a huge burden that can be lifted off someone's income when they're really concerned about how much income they're going to have.
And so now we're talking about uh, our transitioning into retirement and our income positioned for retirement, which really, for most people, is a fixed income moving into retirement. And so positioning our assets for retirement versus pre retirement is substantially different. And I think people don't anticipate that and then last minute are trying to make decisions on, okay, how do I better position for cash flow? And definitely retirement or optimizing your retirement income is a significant piece that a lot of people miss as they're preparing or approaching retirement. So let's talk about, I think it's chapter 7, and how to optimize retirement income to get the most income out of it and remain in control of that income.
Sure. And you know, for chapter 7, Robert, you mentioning income is a huge factor. I mean, we all know we're going to want income in retirement, right? But what a lot of people think of is how much in assets do I have? When really what we need to be thinking is how much income after taxes can those assets produce for us to be able to spend throughout our retirement? Now, we have strategies that can be implemented, and obviously it's all part of this educational process, learning about them. I mentioned you don't know what you don't know, but there are actually programs that can help people generate their own guaranteed income. Now, what we have is what we call them is we call those our paychecks, right? Because our paychecks are intended to cover all of our basic needs, right? So you know, if we still have to pay on our mortgage or if we have rent that we have to pay, you know, cell phone, utilities, all those, if we had enough guaranteed income streams through Social Security, some people may have a pension. A lot of people don't realize that you can actually set up your own pension so that you have guaranteed income for the rest of your life. But imagine what a weight off our shoulders it would be if all of our guaranteed income we knew would cover those needs. Now, all of a sudden, that frees up other assets in order to generate additional income for what we like to call the play checks. And those are what we want to spend on our lifestyle, going out to dinner, traveling. You know, it's funny, a lot of people are so worried that they're going to run out of money in retirement that they spend so little, right? I mean, they thought in retirement they were going to join the country club. They thought they were going to buy a boat. You know, I mean, they thought they were going to go travel the world. And then all of a sudden they're concerned about how much money they have, and that they don't want to outlive their resources, that they end up passing away with all of these assets left over, which go to their kids. And then what do their kids do? They join the country club, they travel the world. They're the ones who get to have the fun off of the backs of their parents. Now, I'm not saying that parents don't want to leave as much as they can to their kids, but we need to have some guaranteed income to give us the peace of mind that we can use those play checks for our lifestyle.
Absolutely. Great point. And, we talk about helping people transition through the retirement process with guaranteed income and then discretionary income as well. But if people have done this right, they've managed their debt, they have an emergency plan, and they understand their investable assets, prepare them for retirement income properly, we know that an example, we keep saying 1 million or more, but can you give us some examples if somebody's followed that recipe all the way through, the potential of the additional assets left over even after the discretionary income that then can transition into, not only were they able to live the retirement that they wanted to, but they're also able to pass on the remaining assets to make a significant difference in either their family members, their children, or their favorite charity. Let's talk about Chapter 8 and the impact that you can leave if you've done this all properly.
No, sure. And you know what? A lot of people hear the numbers that we're talking about with an additional million in income in retirement that is not going to be subject to taxation. And a lot of people think, what, those numbers are not realistic. I cannot achieve that. And the thing is you can achieve those goals. It's, I mean, we say these are easy steps, and I realize some of them are easier than others. But if we do follow through, as Robert mentioned, then this is achievable. And what we've found is, for those who go through all of these steps, the difference of what they pass on is saving hundreds of thousands, if not millions, strictly in taxation that their heirs would have to pay when they pass on the remaining assets, homes, all of these things. So I mean, like a recent example that we had is, we had a client who came in, and this was even before the Accelerator program was available in the financial literacy. And what we were able to do is able to show them how they could pass on an additional $2 million tax-free to their heirs. And they didn't know what they didn't know. They didn't realize that the positioning of their assets and where they had them would cause that money to go to Uncle Sam instead of the people that they love. I mean, we work too hard over the course of our lives to build up as much as we can, to be able to retire, not have to work, and enjoy the rest of our lives. And with as irresponsible as the government can be in some cases with our money, I hate to give them more than they really deserve. So yeah, I mean, going through these steps can definitely save hundreds of thousands, if not millions of dollars.
Absolutely. We're so excited to launch this course, and we encourage you to get started and don't procrastinate, because each lesson within each chapter is only 5 to 10 minutes long. So you can take it step by step without a significant amount of extended time to take the course. But here at the AFI Group, one of our core principles is to live intentionally so that you can take control of your financial future, not leaving it to anyone else. And so click the link below. You can get a preview of every chapter to see the value that we've been talking about for the last few minutes. And also, if you've been sponsored by your employer, a family, or a friend, we don't want you to miss this amazing opportunity. At least take a look at the previews within the course and some of the free chapters that we provide so that you can take advantage of that. We want to remind you that if you do take this course and we're unable to create a plan that increases your lifetime income by 1 million or more, we will make sure that you do not spend a dime on this course. So it's absolutely guaranteed that we can help you develop a plan, one that if you follow, we will make sure that it is a plan that increases lifetime income by the minimum of 1 million. So I encourage you either way, click on the link below, get started, and you have nothing to lose and everything to gain. So at least take a few minutes to check the course out, and we look forward to following up with you and helping coaching you through the course with some online learning, also some live one-on-one learning sessions, and so much more. Click on the link below, and we look forward to catching up with you as you work
Robert,
through the course.
if you don't mind, I'd like to leave everybody with a quote that is a favorite quote of mine, and you may have heard it as well. It's a quote by Lao Tzu, because I understand a lot of this may seem like it could be overwhelming if we try to tackle it all at once. The quote is, "The journey of 1,000 miles begins with a single step." So that's what we need to do. We just need to start taking those steps. And next thing you know, we'll take another step and another step. And before we know it, we're headed toward the path of financial security and financial independence.
Absolutely. What a great way to wrap up today's conversation. So, Ed, thank you so much for joining us today and doing an overview of the program for us and showing all the benefits that they have to offer. We're so excited to see people get involved and really transform their financial future.
It's my pleasure, Robert. Anytime.